The show is called Market, and let's take a look at all the action there was today on the Lal Street. Clearly, caution continues to prevail on the street. As you can see, both the Nifty and Sensex not doing much. The expectation, more or less, was that after a good IIP number that we saw, we would actually see some cheer in the markets, but clearly that wasn't meant to be. And that's also because you had the PMAC really slash its GDP forecast for the fiscal. Remember, we are, of course, now going into the weekend. We will have some, let's see, indications from the Fed on when it is that it will pull back on its bond buyback program. But Ajay, there's no taking away from the fact that we started things on a pretty good footing as far as this week is concerned, and ended the day up a good 4%.
Tanya, probably that's the reason we are talking about around 3% increase on the Nifty and Sensex, because bulk of these gains actually came at the start of the week. By the time the week was coming to an end, we were witnessing a lot of exhaustion and closure of long positions. So optically, we might have gained 3-4% for this week, but markets are clearly getting tired. In fact, higher 5900 mark and upwards, we start witnessing a lot of closure of long position and fresh shorting also coming in. Macro data completely ignoring. Market is ignoring the macro data which is being thrown up and continues to remain in its own mood. Clearly, there is a lot of volatility. In fact, Nifty traded in a 190 point range this week, and VIX, India VIX remains elevated, which, as we have been talking about, is clearly a red flag. So around 30. Today it was flat again, but gradually we are coming lower. So we found some support at 58.50 today. Traders are on the sidelines, not committing large positions or taking large positions, because there are two key events lined up. One, of course, the first RBI policy from the new governor, and of course the big Fed event, and that is pretty much seen in the markets. Today we saw around 14 lakh shares being shed on the Nifty. There were closure of positions, and the focus of the market has shifted from Nifty or Bank Nifty to specific stocks. So you saw certain banking names and certain capital good names, as you were talking about earlier, seeing a lot of long build up, but it's very stock specific, and market is in the mood to take clear direction from these macro events and then only go higher. Also, traders do not expect a huge upside from these levels, and perhaps that's the reason that 6300 call options are witnessing a lot of open interest jump. Some of them are even writing that at this series we might not actually head to that level. On the downside, 5600 put options witnessing highest amount of open interest jump, and overall in the Nifty we actually saw some amount of fall in the cost of carry. So the market is exhausted, and it's taking its own time right now to read at the macro data before forming a big trade.
Okay, let's bring on board then our experts this evening. Joining in on the show, we've got Pramerica Mutual Fund's Vijay Mantri, Edelweiss's Vikas Khemani, and Anand Rathi's Amit Rathi right here with us. Gentlemen, all three of you, many thanks for taking time out for us. Vijay, let me kick things off with you. The expectation was that, the good IIP numbers would bring about some cheer to the markets. Clearly, that wasn't meant to be. But, a word in on the PMAC's forecast of 5.3% as far as GDP growth for the fiscal goes, that seems to have somewhere dampened the mood. What is it that you folks at Pramerica are working with?
See, I think if you look at the IIP number and if you look at the GDP number, our call has been that you'll be surprised if even GDP achieves close to 5% this fiscal. And next year, I don't think, perhaps we'll see below 4% GDP number. That is our own understanding. And IIP number, it may be a base effect. I do not think there is a huge uptick in the manufacturing. And one more reason is that because of rupee volatility, a lot of importer has postponed their importing decision. So that is one reason the trade deficit numbers look very good, and that has been compensated by local manufacturing. So, but we don't see a secular trend as far as uptick in the industrial numbers as far as GDP is concerned. Having said that, I think the important thing to keep in mind is that the rupee has appreciated from 68 level, and that led to a lot of short covering in the market, and that is the reason market has gone up. And now market is really looking at what the new RBI governor is going to do in this policy, as well as the most important factor everybody is watching is what the Fed is going to do in next week. And based on that, I think the people will take fresh position. Our understanding is that as far as RBI central governor is concerned, I do not think there's any need or his hands are tied as far as lowering the interest rate is concerned. We believe interest rate is going to remain elevated in the economy, and Fed would be much more hawkish than market is expecting.
Of course, painting a picture of caution again at Pramerica itself. Vijay, What is your observation of the development which has happened this evening? It was expected, and BJP has gone ahead and announced Narendra Modi as their prime ministerial candidate. But as a market participant, how are you looking at this development? Do you think that the stage is set now for the political landscape to emerge in the next 8-9 months and would continue to remain a focus area? Vijay, that one was for you.
I think it is just the elevation as a PM candidate. Narendra Modi has not become Prime Minister yet. There's a 9-month-long waiting period before the election gets started. Then we have 1 or 2 months of rigmarole of going through the entire length and breadth of the country. But first time, I think after 1984, we have seen people are railing around one person. Now it is up to the political party BJP to convert that into people coming and voting. If BJP is able to get people to the vote, then I think they have very good chances of forming the next government. And I think as far as North India is concerned, the numbers as far as our understanding is concerned will surprise many pundits. So if BJP is able to form the government, and if the BJP form government, definitely Narendra Modi is going to be the Prime Minister of the country, I think it will be huge positive for the economy. And if it is a huge positive for the economy, I think it's going to be positive for the equity market as well.
Vikas, let me bring it to you then, away from politics, and let's talk about how you are approaching the investment-led themes like capital goods. Just yesterday, the IIP data seemed to suggest that that particular sector has actually grown by as much as 15%.
I think definitely, there is a little bit of case which is being, or the case is being made that I think if you believe that economic cycle is, or capex cycle is close to bottoming out, and valuation of the stocks are looking interesting and attractive, I think we have done a lot of work on that, and we feel that we are close to bottoming out of the cycle. Now how long it will take in terms of panning out might be slightly longer than expected, but I think there is a risk reward which is sort of getting in form of in favor of looking at some of the industrials and capital goods names, and I think we've done a lot of work on that. I think recently we've also sort of done in-depth work on Larsen and Toubro, and we put out a report under Brevard series, and where we mentioned that I think the stock risk reward is in the favor from here on. The order book is accreting but slowly, and I think a large part of the order book is I think now on track in terms of execution. While overall environment is slow, hence the sentiments are bad, but I think if you look at slightly long-term picture or slightly recovery in sight, then I think capital goods or industrial stocks can look attractive from here. So I think incrementally we've been advising investors to look at stock specific, to look at company, and I think what sector they are exposed to, and I think make selective bets in terms of capital goods and industrials.
Amit, at Anand Rathi, what exactly is your big call, or how are you approaching the markets right now?
I think we're not really contrarian at this point of time. But one of the big calls that we have is that we expect interest rates to go down significantly. So really, our call is over the next 12 months, we expect 10-year yields to be sub 7%. And once that happens, you will see a lot of cyclical stocks will actually rally when interest rates go down.
Vijay, I want to bring you in on, a point you were making about the volatility that we are seeing in the currency. We have, as you mentioned yourself, seen the currency sort of appreciate, but it has been coming under pressure for the last couple of days. At Pramerica, what sort of levels are you working with?
Now, I think from 68 to 62, 63 level, I think we were expecting these level. 1 year back, we have put our note out saying that we see currency at 65 level. Now the currency is appreciated, and now we are clearly seeing that over the next 6 to 9 month, currency will continue to depreciate. Because if you look at the macro data, these are not looking very good. What RBI has done is giving some breathing space to the central government to take policy reform to change the tide, which doesn't look like happening. If you look at current account deficit number, and if you look at short-term liability borrowing which the government, which the corporate has to pay, if you put these together, they are close to 90% of the India's foreign exchange reserves. So until unless manufacturing sector and commerce improves, I don't think you can solve problem through finances. So it may be 1 week or 2 week rupee might have appreciated, but I think over next 6 to 9 months our call is rupee is going to continue to depreciate from these levels.
Vijay, you know, you are actually talking a little similar to some of the other market participants we've been interacting with. You know, GMO earlier in the day was indicating that the growth in our country could fall as low as 3%. You are already indicating less than 4 or thereabout for the next year. In such a scenario, and also indicating that the rupee may continue to weaken further in the next couple of quarters. At Pramerica, how are you approaching the markets? Which are your sector underweights, and where exactly are you deploying money?
See, I think it is not necessary that with GDP need to expand or then only the market perform. We have seen Chinese market where GDP has been going up 8-9% and even worst case scenario 7%. But Chinese market has not delivered investment performance for 10 years. And if you look at Indian equity market from 2008 till 2011-12, the GDP growth was close to 8%, but Indian market has not appreciated. What we are clearly seeing that GDP, the economy is going to slow down, but the stocks are going to deliver very good performance. And more particularly, we see stock over a period of time, performance would come more from mid-cap stocks going forward. Because if you look at large-cap stock right now, most of them are driven by the global liquidity, FIs putting money, and they focus on top 50 stock. So if you look at that universe, the quality stocks are available at high valuation, and they are very good quality stock, but the valuations are not high because there's no liquidity in those stocks. Nobody is buying those stocks. So going forward, we see real value coming in earlier large cap, which have become mid cap. There's one point. The second point is that we continue to focus on export-oriented company. We continue to focus on pharmaceutical, and we are avoiding interest-sensitive stocks, and we are avoiding companies which have borrowing from international market or in foreign currency denominated. One more thing we are clearly seeing, and which is going to happen, is that in India, leadership is going to change across various sectors. You will find that in Indian market, the weak companies are giving away and the strong companies are going to acquire those companies. So the margin of the strong players in every sector is going to go up. And pretty recently, we have seen one cement plant has been acquired by a very much strong market leader at very attractive valuation. And we see these kind of things happen more often over 6 to 9 months, next 6 to 9 months. So in our opinion, GDP may not expand, which is a bad news for the real estate market, but I think a stock will deliver very good performance over next 3 to 5 years. We are putting our neck out and saying that in India, you will see outstanding investment performance over next 3 to 5 years, irrespective of GDP expansion or no GDP expansion.
All right, gentlemen, all three of you, many thanks for taking time out for us in this edition of Market Hour and sharing your viewpoint and strategies. Let's move on then and talk about advanced tax numbers that have been trickling in. And from the looks of it, the current quarter is turning out to be a good one for both IT and pharma firms. Vijay Iyer is joining in then with more details.
The second installment of advance tax is due on September 15, which is coming over the weekend. But the initial set of numbers which have come in, particularly from the banking sector, which contribute close to 22% of the advance tax overall collection, does not seem to be that encouraging. To begin with, SBI is likely to shell out around 1100 crores versus 1820 crores on a year-on-year basis. Dena Bank is once again expected to shell out somewhere around 25 to 50 crores versus 184 crores that it did in last year. Bank of Baroda is flat at 620 versus 620 crores. Central Bank again is down. It's just 150 crores versus 268 crores. Kotak, although, is just slightly above at 170 crores or 160 crores. And on the auto sector, the numbers once again are not encouraging. Tata Motors is once again not expected to pay any advance tax. So overall, the picture doesn't seem very positive, because to meet the budgeted targets, there needs to be a growth of around 18.5%, and the current indication is that this growth may be around only close to 13 to 14%, which means there is going to be pressure when it comes to the direct tax collections overall, which clearly means that there will once again not good news coming in for the finance ministry. But yes, clearly these are just initial trends. One will have to wait and watch for the complete picture emerging on September 16, that is on Monday. But clearly the indications are that the second installment of advance tax number, it would be a muted growth story.
Undoubtedly. Thanks for that, Vijay. Let's take a short break. But up ahead, we shift the focus on the Wall Street, which is trading mixed, and Julian Mayo, co-CIO of Charlemagne Capital, will join us on the show from London.